quarters.
You know, it's interesting, Mark. You know, we have all this data that we get now and the polling and a lot of great stuff on the track record. And the other reality is we are still months out from the election itself, and a lot can change. And you just days ago really wrote about this idea that the second quarter is starting out slow. Things can change meaningfully before now and the election. What are the biggest risks for President Biden heading into it?
Well, the biggest risk is that the economy will actually slow down the way the Fed wants it to. You know, we're in kind of this unusual environment now where, you know, we're seeing, you know, strong economic growth, but inflation hasn't moderated to the level that the Fed wants to begin cutting interest rates, which would in turn, you know, boost the economy. So the story you referenced just highlighted the fact that we're starting to see economic indicators come in, housing starts and retail sales, that show that the second quarter is off to a slow start, which in a perverse way is good news for the Fed, because a slowing economy means, you know, inflation can get under control and they'll be in a position to cut interest rates. So the risk for Biden, I think, is that the economy slows too much, right? That, you know, we see these indicators come in that show a weakening of the economy. And if we don't see the Fed cutting interest rates until, you know, later this year or even into 2025, you know, he won't benefit from any of that economic boost.
That's a good point. Fed friendly, not necessarily President Biden friendly when it comes to that economic data. Hey, Mark, great to have you join us. Thanks so much for taking the time this afternoon. Do appreciate it. Mark Niquette, Bloomberg News Real Economy team reporter. Up next, we're staying on inflation and the American consumer. We're going to check in with the lead at the Carney Consumer Institute for an update on what consumers are noticing when they're shopping. First up, though, a check on the latest world and national news with Amy Morris in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Amy.
Hi, Tim. We're hearing now from top-ranked golfer Scottie Scheffler, who was arrested this morning on his way to the PGA Championship in Louisville, Kentucky. Now, Scheffler says it was a chaotic situation and that he misunderstood what he was being asked to do and that he never intended to disregard police directions. The Masters champion was arrested for not following police orders during a pedestrian fatality investigation. He's charged with second-degree assault on a police officer, reckless driving, and some other offenses. The Israeli military says its troops in Gaza found the bodies of 3 Israeli hostages killed by Hamas in its October 7th attack, including German-Israeli Shani Lauk. The military identified the other 2 bodies found as those of a 28-year-old woman and a 56-year-old man. The military says all 3 were killed by Hamas while fleeing the Nova Music Festival. That's an outdoor dance party that they were having near the Gaza border. The military did not give immediate details on where those bodies were found. Houston is in recovery mode after a violent cluster of storms rolled through that city, causing widespread damage and power outages. At least 4 people were killed. Utilities say it'll take at least a couple of days to get everybody's power back on. And Fed Chair Jay Powell is working from home. He tested positive for COVID. A Fed spokesman released a statement saying that he is experiencing symptoms, so he's isolating. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
other thing that startups need to look for is a market that is either started to undergo or is soon going to undergo exponential growth. I think this is actually related to one of the biggest mistakes investors make when evaluating startups. Investors always say, well, what's your growth rate? We care about the growth rate. Investors will forgive smallish revenue today if it's growing quickly. For some reason, people don't think about markets this way. But if you think about the most important startups, they are the ones that I start in small markets that are growing very, very quickly. 11 years ago, the market for iPhone apps was $0. It's now huge. And I think if you only think about the TAM today, you'll make a big mistake. What you really want to do is identify a market that's going to grow every year and be able to ride that up elevator.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
My general advice is continue to seek out companies or people that are maybe one stage or two stages ahead of you. And I think this is generalizable to not just to startups, but anyone seeking fast growth in their own professional lives, in their careers too. What does greatness look like? Try to seek out people who've been there, done that before, and then try to not connect with one, but try to interview 3, 5, 10 people to see what is a general pattern of greatness that look like that will get you to the next level of the company, next stage, maybe a year, 12 months from now, 24 months from now. Seek out people who kind of went down the path a few times. Then you'll start to find this pattern that start to emerge. What are things that you need to have 12 months from now, 24 months from now that you currently don't have? Then try to build a path towards that. It's almost like Amazon's or Jeff Bezos' mantra of working backwards. Think about what your end game or next stage look like, and then figure out your steps to getting there, and who do you need to work with, upgrading or coaching your existing team or recruiting from somewhere else to really level your leadership. Because ultimately, the job of a CEO is to do 3 things, right? One is get the strategy right for your company, making sure it's executed, get the right teams onboarded, getting the resources, whether it be fundraising or allocating your resources. So strategy, people, or team, figuring out how you need to navigate those things to get to the next level.
When it comes to inflation, are they noticing that it's easing? Because as we just discussed, that easing doesn't seem to be hitting voters in the polling just yet.
Yeah, well, they do comment. Fewer consumers are commenting about noticing price increases in certain key areas, such as food and gas. That being said, I think we're still seeing a bit of a struggle to connect that directly to how they feel about the economy. And so we are seeing consumers just increasingly be cautious. I think that's what you saw in the retail sales numbers this week, which is, I'm not overly concerned. I don't think we're doom and gloom, but we're seeing that slowdown that we've been anticipating, that consumers have finally reached a point where they're perhaps really having to prioritize or pick and choose how they're spending. And one of the major numbers that I'm watching, though, is personal job security. So, unemployment numbers are one measure, but it's really consumer spend is informed by how somebody individually feels about their job situation and how safe they are to either keep their job or find a new job if they need to.
It's interesting, too. When you're an investor, investors talk a lot about inflation slowing, but really it's the pace of increases slowing. And Constance Hunter over at Macro Policy Perspectives made a great point this week that for many Americans, the price is just so much higher than it was years ago for many products, services, housing. How do you view that disconnect? This idea that still people are living under the weight of these perennially higher prices, really, even if inflation is slowing at the rate it's increasing?
Right. I mean, I think you're seeing a couple different factors feed in here. So some of the unfortunate news about consumers is you're seeing savings on a decline. So there was some recovery after the high savings during the pandemic in early 2023. Now you're seeing that number a steady decline while seeing credit card delinquencies also tick up. So in some cases, unfortunately, folks probably are not, they're probably spending a little bit beyond their means. Beyond that, it's just about consumers really evaluating their discretionary spend and how they categorize spend themselves. So where are they prioritizing? Where are they making trade-offs? And how can they continue to kind of navigate this complicated environment?
What about when it comes to what many would argue has historically been discretionary spending? I'm thinking of, Katie, something like travel, which, historically, if people don't have the money to travel, at least if they don't need to travel, they're not going to spend the money to do that. What are you learning, sort of like the new normal when it comes to travel?
Yeah, I think we all have a bias to sometimes stick with the way we've defined things in the past: consumer discretionary spend, consumer staples, and some, version of needs versus wants. But what we hear from consumers is they tend to define things a little bit differently, and they're able to really prioritize how they want to spend. Travel is a great example. So when we talk to consumers, 26% of consumers told us they consider their annual vacation to be a must-have spend. And in order to enable that, that's actually where we're seeing them pull back in other areas. So perhaps it's food, and they're willing to, again, make trade-offs or even cut certain things from their typical grocery shop to really allow for that. Whereas certain items like food that feel like a staple, a lot of times there's things that they, again, can give up. Maybe I don't buy as many snacks this week. Maybe I go out to restaurants one less a week. And so I really think sometimes it's about seeing that bigger picture of how a consumer understands just how discretionary versus must-have something is.
I think we also have to differentiate types of consumers here, because you kind of hinted earlier about this idea that some consumers are feeling stress. And we saw retail earnings this week. We see more retail earnings next week. And you see upper to middle class customers trading down still. So buying cheaper goods instead of more expensive ones. A lot of commentary around how lower end consumers are feeling stretched. Where are the biggest discrepancies as you see it? Who is feeling the most pressure, and will that pressure start to widen among more groups?
Yeah, I think this is another area where we try to take a two-pronged approach at it. So one is the obvious, more traditional demographic income split. So looking at high, medium, low income. But another question we ask consumers is if they feel like they're living within their means or paycheck to paycheck. And what we found is folks that feel like they're living within their means, regardless of what income category they're in, there's more commonality there, and with the people that are living paycheck to paycheck. So I know, for instance, we saw Walmart's earnings release. I actually caught your segment on it yesterday. And I think the high income shoppers there is a great example of people. I think some of the stigma, maybe even around shopping certain stores, has just slowly gone away. And as we've had these continually tightening wallets, people simply want to know they're getting the best bang for their buck on the basics.
Yeah, Katie, it's so funny. Well, I was just going to say, it's funny you bring that up,
Tim.
Because we were talking about this in the newsroom yesterday after those numbers came out. And there were folks around my desk just talking about how the way that Walmart's in-store offering has changed, especially when it comes to groceries in recent years, just shows that it's really trying to go after so many different types of consumers right now.
Absolutely. You see it with some of their new private label launches, but they've also done more partnerships with direct-to-consumer brands over the years. They're not the only big box retailer doing it, but they are known for being willing to test and learn, but also if something doesn't work out, they kind of cut their losses and move on from it. So I think that you're seeing all these different types of retailers really try to adapt to the consumer and take all the data that they have and give the best experience possible. And I think even they're realizing certain things that perhaps we traditionally attributed to standard demographics like income, that's not really the case. Everybody likes to get a deal. Everyone likes the best bang for their buck. And so moving away from some of those preconceived notions has enabled a lot of success for retailers that understand their value proposition.
Hey, before we let you go, Katie, I want to just get an idea of what's coming up next at the Carney Consumer Institute. I know you have a report coming out next week about innovation, and it kind of shows the delta between how consumers see innovation versus how brands internally see innovation. Talk a little bit about what to expect there.
Yeah, well, Well, we all know innovation's actually like pretty ambiguous as it is. It can be described to be anything from like a simple line extension to some, massively disruptive category or technological advancement. But in reality, lately, what we hear a lot of is like consumers are increasingly demanding more specialized, more niche products. And what we found when we went to consumers is that's not the case. So almost 90% of consumers told us there's either enough products in most categories or too many in some categories. So it's really about, I think, repositioning inflation to make sure we're doing it in the right way and not proliferating for innovation's sake, by just deepening some of those consumer feedback loops and really understanding when we want better, when we do just want new or more options, and kind of really trying to delineate, what's going to be most successful at any given time.
And Katie, certainly look forward to seeing that report. Thank you, as always, for joining us on Bloomberg Business Week. That's Katie Thomas, lead at the Carney Consumer Institute. The company, once again, looks at consumer behavior data and insights to give businesses an idea about how to engage customers. Well, taking a look at the equity market right now, seeing things are mixed. The Dow is higher by more than 0.1%, while the S&P and NASDAQ are both lower on the day today. Coming up, it is Options Insight with Abigail Doolittle on Bloomberg Business Week.
company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Apple is reportedly developing a significantly thinner version of the iPhone. That's according to the information. And it says that version could be released as early as next year. Apple shares, they're just about flat on the day right now, up less than 0.1%. GameStop tumbling again for a third day of declines after the company said it may sell up to 45 million shares, further pairing the meme-fueled rally that had sent the stock flying at the start of the week. GameStop shares, they're down now by 23.8%. Also declining, AMC Entertainment, that stock now lower by 5.6%. Chevron's $53 billion deal to buy Hess Corp has received a nod of support from a major proxy advisory firm that said shareholders should vote in favor of it. Glass Lewis issued a report saying that while some aspects of the merger are less than ideal, Hess shareholders will have the opportunity to participate in the potential future upside of the combined company through newly issued Chevron shares. Both Chevron and Hess Corp up by about 1.1%. After earnings, Applied Materials, the largest U.S. maker of chip-making machinery, is trading lower. Last night, it failed to impress investors with its latest forecast following a rally in the shares this year. Applied said fiscal third-quarter sales will be roughly $6.65 billion. That did top the average Wall Street estimate, but some analysts had predicted revenue as high as $7.13 billion. Again, Applied Materials shares, they are trading lower today. Applied Materials down now by 1%. Those are our top company stories at this hour. I'm Charlie Pellet, and this is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stennebeck on Bloomberg Radio and Television.
It is Bloomberg Business Week, and this week was one of the return of meme stocks. And next week, we, of course, have NVIDIA earnings. On both of those topics, it's time for Options Insight with Bloomberg News Chief Markets Correspondent Abigail Doolittle, who's joined by David Bauer, Managing Director at O'Neill Securities.
Thanks so much, Tim, and great to have you with us, David. And as Tim was mentioning, this really has been the return of the meme stock rally. It's pretty incredible. Earlier this week, GameStop in 2 days had gained more than 130%, and now over the last 3 days, it's down 70%. On the month of May into the 3-day decline, it had been up about 500% in the month of May. So those meme stock investors out in force. What are you seeing options-wise there? Was there any signal options-wise ahead of the meme case?
There was some, well, first of all, Abby, thank you for having me on again. There was some activity last week, but on Monday and Tuesday, option call volumes really exploded. There was over 1 million calls traded in AMC on Monday and Tuesday, and over 400,000 calls traded in GME as well. What was interesting is that you had the same implied vol spot up, vol up phenomenon that we had back in 2021. And then when the stocks were down on Wednesday and Thursday, you saw the vols come back in.
So before we switch to NVIDIA, I'm really curious. So if it's very similar to what happened in 2021 in terms of implied volatility, are you able to make any predictions of sorts what's next for these meme stocks? Will we see the rally resume, or are we going to see these stocks go right back to where they were? Because, you know, GameStop just a few weeks ago had been a $10 stock, and then a couple days ago it was a $50 stock. Now it's a $21 stock. Lots of money being made and lost.
So I think the big difference between now and then is the institutional short base is much less now. Back in 2021, the GME short interest was 140% of the float, and on Monday it was only 25%. People have learned their lesson, and I think the extent and the duration of the moves will be less extreme. Hedge funds learned from this, and what was different this week is we saw large option prints on both the long and short side of the market, which we didn't, really see last time. People were long puts.
And then very quickly, in terms of NVIDIA, this could be a make or break moment for the markets in terms of their report coming up on Wednesday. Are you seeing anything interesting relative to calls or puts or other derivative activity there?
Well, NVIDIA's implying an 8.5% move for earnings, and over the last 8 quarters, it's moved an average of 8.5%. The all-time high is 974. We're right near there. The derivatives group at William O'Neill Securities likes buying the June 1,000-1,100 call spread for around $20. Gives you about a 4-to-1 payout, and we And the reason that we like call spreads is because skew is flat to slightly inverted.
So you're bullish, or at least O'Neill Securities is bullish NVIDIA. Thanks so much, David Bauer of O'Neill Security. Great to have you with us on Options Insight. Tim, back to you.
Thank you so much, Abigail. Do appreciate that. Just a reminder, NVIDIA earnings happening next week on May 22nd after the market. NVIDIA shares down by about 2% right now, trading at about $925 a share. Well, for those of you sticking on Bloomberg TV, coming up next, it is the close. If you're going to continue with us on Bloomberg Radio, we got a lot coming up, including the end of the first week of the Archegos trial, Bill Wong's first week on trial, what you need to know about the spectacular collapse of the $10 billion firm. Also, in the magazine, Walgreens and CVS try to fix America's flailing pharmacies, and David Weston is going to be joining us to stop by with a preview of Wall Street Week. Speaking of Wall Street, well, the Dow is higher by 0.2%. The S&P 500 right now is flat, while the NASDAQ Composite down a little more than 0.1%. This is Bloomberg Business Week.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
And a good afternoon, everyone. It is Bloomberg Business Week. I'm Tim Stenevec. That is Shonali Basak, Bloomberg News global finance correspondent, in for Carol Masser this afternoon. And Shonali, we got a great couple of hours ahead of us.
We sure do. We have a lot of stuff to get through, including the markets, of course, which is having quite a winning streak, at least on a weekly basis, struggling to hold on to gains today, but also some big news this week. We are going to cover the first week of that trial faced by Bill Wong over the collapse of Archegos, one of the largest white-collar crimes stories in history.
$10 billion firm wiped out in a matter of days.
Yeah, at least that. He lost $36 billion at the end of the day of his own wealth. And so $10 billion lost for the banks alone. And those bankers actually have been testifying.
All right, looking forward to that. Also, I don't know about you, Shonali, but going to a pharmacy is not a great experience for a lot of people.
No.
And it's starting to hit the bottom line of these large pharmacies. In a Bloomberg Business Week, a great story about how Walgreens and CVS are trying to fix America's flailing pharmacies.
And it matters a lot. We know, of course, the pharmacy business is something that people have stepped out of. We've been talking a lot about Walmart this week, this idea that it wasn't profitable, really, for them to stay across all these footprints. So where do you get your drugs?
Well, actually, you know what I've started to use, and we'll get to this a little later, is these online delivery ones.
Interesting.
Like, yeah, I forget what the one we use is called, Alta or Capsule or stuff.
I do deliver my dog's drugs
that
way.
But it's like if you need a prescription, I mean, I'm not like, saying this is a better way to do it, but it's pretty convenient to do that stuff.
We're all about convenience.
Yeah.
We're also going to talk to David Weston today, not about drugs, but about Wall Street Week. We're going to talk about interest rates, what some of the greatest minds in finance are telling him. Really surprising stuff in there this week so far.
Also, we're going to talk commercial real estate and development with the CEO of the Fallon Company.
Yeah, it's an interesting time, as we know, in commercial real estate. And also, we're going to talk to the co-founder and CEO of ShopSense AI. He's going to stop by and talk to us too, Tim.
First up, though, a check on the day's trade and top business stories. Here's Charlie Pellet.
Hi, thank you very much. And right now, we got stocks swinging between gains and losses. S&P right now up, barely up by just half a point, really fluctuating. We've got the Dow up 73, up 0.2%. NASDAQ, though, in the red. NASDAQ down 26 right now, drop there of 0.1%. S&P, by the way, is on track for a fourth winning week. 10-year, 4.41%. The 2-year, 4.82%. Spot gold trading at a record $24.13, up $36 the ounce, up 1.5%. And West Texas Intermediate crude oil up 1.1%, $80.09 for a barrel of WTI. So it is a mixed Friday, as I mentioned, a winning week. As for the Fed, the economy, and the market, Laura Rame is chief economist at FS Investments.
I think if any of us had thought at the beginning of the year, when 7 rate cuts were priced in, that we were going to pull back almost all of that and still have these record highs, people are forgetting how important the growth story is to this equity market. I think they're still thinking it's a Fed rate cut story.
Lara Rame of FS Investments. Reddit, in a partnership with OpenAI, that will bring its content to the chatbot ChatGPT and other products, while also helping the social media company add new AI features to its forums. Reddit right now trading higher. We got Reddit surging by 9.4%. Recapping mixed Friday, stocks wavering near records. S&P right now up by 1 point. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Do appreciate it. Well, as we just heard from Charlie, stocks are wavering near record highs after a rally that put the market on track for its longest streak of weekly gains since February. Well, the move higher has lost some steam in the past couple of days. The market's still on pace for its best month of 2024. For more, let's bring in Abigail Doolittle, Bloomberg News Chief Markets Correspondent. She joins us here in the Bloomberg Interactive Brokers studio. So we've been talking a lot about catalysts now that we're at the end of earnings season. We have NVIDIA next week, but taking a step back, I'm wondering how you're looking at days like today and yesterday where, okay, we're hovering near highs, but we're not really seeing much movement.
We're really not seeing much movement at all. The S&P 500 right now up fractionally. The NASDAQ 100 down about 0.1%. All the index, most of the indexes, I should say, are really just not moving very much. The bank index, the KBW bank index up 0.3%. That's one of the bigger movers. The NASDAQ Golden Dragon index up 0.5%. The rest of the indexes up or down just ever so slightly. And that was really the story yesterday. So we put in those all-time highs, earlier this week. It seems as though investors are a little bit tired. The average volume today is 20% below the 20-day average. Yesterday, it was well below. So, we've had this big run up after having the 3-week sell-off for stocks. And again, I just think that investors are kind of sitting back a little bit. In terms of the catalyst, NVIDIA is probably the next big one ahead of the Fed. PCE, we were talking about this earlier this week. Sometimes you don't know it until it comes out, but it does seem as though investors are waiting for some new piece of information.
We did talk with Gina Martin Adams a little earlier, and she made the point in one of her recent notes that in a high inflation environment, these inflation reports take on a different significance. And we certainly saw that with CPI this week.
We certainly saw that this week, and it's a little bit confusing to me, only from the standpoint that CPI for the month of April was 0.1% cooler than anticipated after 3 hot months. And you could really make the case that the data had been trending a little bit higher for inflation. So 1 month a trend does not make. But investors watching these reports like a hawk and reading into it whether or not the Fed's going to be able to cut right now. 2 cuts or so are priced in for the Fed, but there are a few people who are saying that you really need to consider whether or not this will be the year of the cut still.
It's interesting. One thing you're mentioning is the investor fatigue, or I guess a little bit before we head into the weekend. The semi stocks are down. The semiconductor index, yes, they're up on the week, the Philadelphia Semiconductor Index, but they are down on the day.
Good point.
Ahead of NVIDIA.
Yeah, good point. And that's actually one of the outliers that I did not mention, down about 0.8%. And that has to do with NVIDIA, down more than 2%. That's really the biggest weight there. Let me pull it up and see if there are any other notable stocks down. So NVIDIA, to some degree, it's the next. This market's so interesting. It's just so tightly wound that each of these events turns into this binary event where it really does not have to. But if NVIDIA puts up a good quarter, the market will at least be able to hold on to its gain, so long as it doesn't turn into a sell the news event or go higher. But if it's not a good quarter or the guidance doesn't come in great, then it's really the exact opposite. But NVIDIA down, bear with me, I'm doing the points. So NVIDIA, the biggest drag. Most of the stocks in that index are down. You also have Broadcom down 1.5%, Lam Research down 3%. So there's a lot of notable movers in there. A piece of this could also be, and we had these Chinese tariffs put into place earlier this week.
Right.
Back in 2018, 2019, 2020, when former President Trump initially put in tariffs, the chips would drop, great percentage points on those tariffs and the trade tensions between the U.S. and China. Whereas earlier this week, that was not the case. We had these stocks selling off into the tariffs put on, but now this weakness could be a little bit of that too.
It's pretty remarkable to see that. We're actually going to be talking about that a little bit later with David Weston because he's talking about that on Wall Street Week tonight. Okay, so we have NVIDIA next week. We had inflation this week. We had tariffs implemented this week, which, to like kind of a big thud.
A big thud. It was pretty well telegraphed. So I think that some of the weakness that we had a few weeks ago may have incorporated that. But I think that maybe a piece of it also is the fact that the former tariffs, they are still in place. These are adding on. They're sort of in various areas, people not taking it very not taking it seriously in the same way. I think something that's escaping the market conversation, maybe from a geopolitical standpoint, President Xi and President Putin met this week, and they talked about their, I'm unable to remember the exact language, but over the last 2 years, a no limits friendship. And this is their 40th meeting since Xi took office back in 2013. And they made the case that they are willing to do what it takes to be a power, if necessary, against the United States. Now, that's a real ratcheting up of tensions. That's worth, not from an immediate standpoint, but to have that in the background with these tariffs, it seems as though there are increasing tensions with China. And given the fact that it's the world's second largest economy, by some measures, the world's first largest economy, not the best backdrop. Again, not an issue right today, but something to keep in the back of the mind.
But to your point, Abigail, what I find so fascinating about that is it's like the definition of frenemy. I mean, if you think back to when Xi Jinping was in San Francisco a few months ago, you had the CEOs of pretty much every major U.S. corporation there clamoring to get into the room with him for that dinner, because those executives want access to the Chinese market. So on the one hand, you have the tension that you just talked about, but on the other hand, you have U.S. businesses wanting access to that market.
Well, when the U.S. government puts tariffs on those products, it makes it a little bit more difficult. I mean, there's an interesting story. I think I read it on the Bloomberg. It might have been on The Economist if it wasn't, but that they are sending a lot of its Teslas to Canada because there's only a 6% tariff there as opposed to the 100% tariff. So it makes a really big difference. In fact, if you take a look at the trade numbers, so China, their imports to the U.S. in 2001, right before they joined the WTO, 100 billion. Right now, 400 billion, which is a massive move higher. But these tariffs have really slowed it. Now, what was so interesting to me, China is not even the U.S.'s largest import trading partner. It's Canada and Mexico. But apparently, a lot of the Chinese goods over the last couple of years have been going first into Mexico and China and then coming into this country to avoid those tariffs. I don't know that for a fact, but that I've heard that and kind of would help to account for those huge numbers and making sense of it. Because when I heard that Canada is a bigger trading partner than China, I was like, huh? How does that work?
It's incredible. Also incredible.
There's a lot of lumber and oil, but
incredible to see the rise of Mexico during this time.
Yes, it is. It is. And they have an important election coming up, I think, on June 2nd or June 3rd. So that will be one to watch as well.
Abigail Doolittle, Bloomberg News Chief Markets Correspondent here in the Bloomberg Interactive Broker Studio. Thank you so much, Abigail. This is Bloomberg.
To the spotlight 3 years after a spectacular collapse, losing billions of dollars with the start of founder Bill Hwang's trial on fraud, racketeering, and market manipulation charges. And the trial kicked off on Monday in Manhattan federal court with opening statements continuing through Thursday with testimony from several witnesses, including those who worked at the banks and who experienced the frantic final days of Archegos' days in March of 2021. Remember, it wiped out Hwang's $36 billion fortune and cost some of the biggest banks on Wall Street roughly $10 billion. And to cover it, we're going to turn to Bloomberg News legal reporter Ava Benny Morrison, who joins us from federal court in Manhattan covering the trial. She has covered it all week long and in the lead up to it. Ava, what was most striking to you as you saw the first week of this trial kick off? Of course, one of the largest white-collar trials in history.
I think it gave us a really good foundation for the case, what the prosecution was alleging here and how the defense was countering it. We heard some pretty striking testimony, as you said, from individuals from the banks that had done business with Archegos. We heard from a former risk manager from UBS who said that he delicately was trying to figure out the breadth of the positions that Archegos had in a concentrated number of stocks. He described feeling that sinking feeling and that sense of doom during that week in mid-March 2021 when Archegos was Archegos' value was plummeting. He said he realized that UBS was going to take on massive losses, and he alleged that Archegos and a number of senior executives there had lied to him and lied to UBS about its exposure to other banks as well. We also heard from someone from Jefferies who remembered calling someone senior at Archegos during that same week. That person had tried to withdraw some excess from the bank, and there was a sense of urgency involved. And the woman from Jefferies called Archegos and said, "Hey, like, what's the emergency here? Are you having a liquidity problem?" And she said that Archegos said, "No, everything's fine. We don't have a liquidity problem." So it was interesting to hear those events from the point of views of bankers who had those relationships with Archegos.
So take a step back for us, Ava, to those folks, and especially for those folks who remember what happened back in 2021, but might need a refresher. Remind us why Bill Hwang is on trial, what exactly he's charged with.
Sure. So Bill Hwang ran a family office in Midtown Manhattan called Archegos. He was worth about $36 billion at that point in time. He was very well known for being a very successful and efficient trader, but he really flew under the radar. And he was investing in a small handful of stocks and using swaps to do so. And the prosecution alleges that he was actually engaged in market manipulation. So he was using these swaps to drive up artificially the price of stock. So it made it seem like there was a lot of interest in these particular companies when in fact it was just one man. The prosecution also alleges that Bill Hwang had lied to a number of these banks. We're talking about Credit Suisse, UBS, Goldman Sachs, to get even more money to continue that trading strategy. The defense has turned around and said, look, he ran a family office. It was his money. He didn't have any outside investors. He didn't have a duty to disclose his trading strategy to anyone. And the banks were falling over each other to try to do business with him because he had so much money and because there were some lucrative fees involved with helping him trade.
You know, it's interesting. This is the beginning of a multi-month trial. It could go on for months, can't it? And at the end of the day, why does it matter now? The money has already been lost. Of course, this matters for Bill Hwang, but why is Wall Street more broadly watching this so closely?
I think because there were so many big banks involved in this. Like I said before, you've got the likes of Credit Suisse, who were arguably one of the biggest banks. They were bore the biggest consequences from this. Their exposure to Archegos' collapse led to their own collapse. You've also got Morgan Stanley. We've heard Goldman Sachs mentioned, UBS and Jefferies. So I think this is getting a lot of attention from Wall Street because people are looking at, well, how did these banks not know how exposed Archegos was and how big their positions were?
Ava, this is also a jury trial, and even just the jury selection process was so interesting in the judge saying that this is going to be Finance 101. It's going to be a big education for a lot of these folks. Is the trial too complicated?
I don't think so. I think both sides, the prosecution and the defense, have done a really good job at getting these witnesses to explain these really complicated financial concepts in layman's terms. So really using simple language to explain derivatives, to explain swaps, to explain what a family office even is and how the stock market works. So it's been, even an education for me who covers financial crime down here. It's been really interesting to see how they sort of simplify these really complicated financial matters.
Ava, what could Bill Hwang face in terms of consequences if he's indeed found guilty of any of these charges?
He could face decades in prison. I think, some of the charges that he's facing have a maximum penalty of 20 years in prison, and he's facing multiple counts. It'll be interesting to see next week some of the evidence from people that worked inside Archegos at a very senior level. Scott Becker, for example, was one of Bill Hwang's right-hand men. He is cooperating for the prosecution. He is someone that we're really eager to hear from and see what his take will be on the events of March 2021.
Ava, We got to wrap it there, but appreciate you joining us from Lower Manhattan. We're at the federal court covering the trial. That's Bloomberg News legal reporter Ava Benny Morrison. Check out her coverage along with the entire legal team's coverage at Bloomberg.com and, of course, on the Bloomberg terminal. Coming up next, we dive into the latest issue of Bloomberg Business Week, which features a story by Fiona Rutherford about how CVS and Walgreens are trying to revamp their pharmacies because it's costing them.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. We got the S&P holding on to a 4-point gain right now. Little change, has been fluctuating. It is on track, however, for its fourth week of gains. S&P right now up 4 to 53.01. Will we close above that level? Stick around to find out. We've got the Dow Jones Industrial Average up 92, up 0.2%, while the NASDAQ Composite Index now lower by 14, drop there of 0.1%. 10-year, 4.42%. The 2-year, 4.82%. Spot gold is advancing, climbing to a record 24.16, up 1.7%. And crude oil up 1.1%, 80.12 for a barrel of WTI. As for the inflation outlook, Lindsay Piegza is chief economist at Stifel.
I think right now, looking at the inflationary environment, it's clear that inflation is very sticky and will likely remain noticeably above the 2% target for quite some time.
Stifel's Lindsay Piegza. Apple is reportedly developing a significantly thinner version of the iPhone. That is according to the information that said this Apple phone could be released as early as next year. Apple shares, they're little changed right now. Apple up by 0.1%. Recapping, stocks higher. S&P on track for its longest streak of weekly gains since February. That would be 4 in a row. S&P up 5 right now, up 0.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Certainly do appreciate it. Well, the Dow Jones Industrial Average right now is at 39,972. Shonali Bassick, who's in for Carol Master this afternoon, certainly saw the red headline earlier this week when the Dow hit 40K. My question for you, Shonali, is what does it mean?
You know, it's funny. I'm soul searching right now.
Are you?
Yes, I sure am. I am messaging a bunch of managers asking the same thing. On one hand, we have people who trade based on indexes. And when you think about the indexes, people think about the S&P, they think about the NASDAQ 100, but the Dow Jones Industrial Average, it does not hold the same weight that it used to hold.
It did 100 years ago when industrials were everything.
Yeah, you know, I'm just going to lean on John Authers for some clarity here. He has a column that was out that says that Dow hit 40,000 and it doesn't matter. And the reason it doesn't matter in part is because he says the Dow is a meaningless index and very little money is tied to it, speaking of the index problem here. But also the weightings of the company are radically different from the relative market cap, which is the other flood. But you know, listen, the reason we just said it doesn't matter, but why does it matter?
It doesn't matter, but it matters.
Yeah, it matters.
I think it's fair. It's like the liberal arts answer.
Yeah, well, you know that they say about liberal arts, it's making a big comeback these days. But, you know, the reason it does matter is that psychological effect. You know, It was only 5 years ago that we hit 20,000. So the American economy, well and fine, and the people who invested in it are also doing well and fine. But again, as speaking of theory, not everyone's invested in it.
Of course, a bunch of bumps along the way, getting from 20,000 to 40,000, but here we are at 40,000 nonetheless. Okay, Shonali, I don't know about you, but I do everything I can to avoid going to the pharmacy. The products are expensive, they're locked up, the line to pick up medications is long. Sometimes the pharmacy is even closed when I try to go, and overall I just find it an experience I want to avoid. Well, it turns out I'm not the only one. As Fiona Rutherford writes in the new issue of Bloomberg Business Week, pharmacy profit margins are falling at the biggest chains, which includes CVS and Walgreens. Rite Aid declared bankruptcy just a few months ago. And a key problem for drugstores is the front of the store, where competition and inflation are making it harder to turn a profit. Jim Ellis is Bloomberg Business Week assistant managing editor, and he edited Fiona's story, which is featured in the new issue of Business Week magazine. It's available on newsstands, on the Bloomberg terminal, and at bloomberg.com/businessweek. Jim joins us from New Jersey. So, Jim, you go to the pharmacy, everything's locked up, the line is long. It turns out you can get a lot of this stuff for cheaper when you order it from some of the biggest retailers online.
That's become the big problem for so many of the that's become a big problem for the drugstore chains, simply because once upon a time, people thought, oh, well, you know, I'm going to go and buy a lot of things as I walk through the store to the back to the pharmacy. And the business model for pharmacies had been, you put that pharmacy in the back of the store. It makes people go through, run the gauntlet through all the candy, school supplies, things like that, and they pick these things up, which is sold at a higher price than you get at other retailers, and then they'll also buy the drugs. That's been thrown sort of apart now because people have discovered that you can go to a Walmart, you can go to even Amazon's pharmacy business, you can find drugs other places. And so therefore, not only are the drugstores losing that business that comes from people picking up prescriptions, they're also losing the business of people buying basically overpriced retail items within their stores, and that's wrecking their financial model.
It's wrecking the financial model, and you could see that some people have already kind of thrown in the towel when it comes to that struggling financial model. Tim is waving his hand.
I'm just like, unless you need Tylenol in the middle of the night for a crying toddler, like it's hard to find a reason, Sonali, to step inside one of these.
I don't know. I live in New York City, so I like to step inside of it. The reason I don't is because my dog barks on the line a lot, so I don't like to take him in there.
So then you have to order it.
But Jim, what are the fixes here?
Well, the first fix is that they've got to come up with some way to make actually going to a pharmacy not such a hassle for a lot of customers. One of the things, particularly since COVID, is a lot of people don't like the notion that they're understaffed. Many of the pharmacies, because they've had shortages of pharmacists, because it's been so difficult to work in a pharmacy since COVID, a lot of people are confronted with lines. They're confronted with waits that they don't want to have, and it's sort of chaotic at the same time within a pharmacy, simply because the pharmacist now is not only preparing your drugs, they may be giving vaccinations, they may be doing health screenings. There's a lot of things, depending on your state, that pharmacists are allowed to do now that they weren't allowed to do before, and that's more work with fewer pharmacists. And so it's become a less, it's not like going to the doctor where you sit up and talk to your pharmacist. And nowadays it's sort of jump in, wait in line, wait, then finally you can get out, and then have to walk back through that gauntlet of things you don't want to buy because they're overpriced. So what they're trying to do is to figure out a way to get the pharmacy, back up to the front of the store. Now that's that's heresy for a lot, for people who've worked in this business for decades. But right now, that's something that Walgreens is experimenting with. Putting pharmacies at the front, so you can come in. And one of the things that people don't like about going to the pharmacy, which is waiting, a lot of that goes away simply because you come in, and instead of waiting in line, you're using kiosks to put in your information, and then you just you can, if you want, go back and wait in your car, and they text you when your order is ready. You can shop in the store if you choose to, but more importantly, you can go other places, you can walk around, or just sit in your car and be more comfortable. That's very different. It also is a pretty big gamble, simply because a lot of the business model counts on that mixture of both pharmacy revenue and that sort of high margin business of retail that they sell within a drugstore.
Jim, it's so hard to hear you say this and see how it competes with the upstarts that I think have taken over in a lot of the bigger cities. Look, they're not available everywhere in the US at this point, but the fact that there are apps that you can give a phone number to your doctor when you're at the doctor's office getting a prescription written, and then something pops up on the app and asks, what time do you want this drug delivered today? Like, that is just so much easier than this process.
The convenience is something that, that brick and mortar retailers like a drug chain, a drugstore chain, they just have to deal with that. They are making, deliveries available, depends on the market, but often the deliveries that they offer are not quite as good as some of these online-only pharmacies. For example, in New York, you can get deliveries at, sort of CVS's, but often it's through a third-party delivery service. And some people don't like that. And some people also get confused when they think of it as sort of, should I be getting my drugs delivered by the same person that brings my pizza?
It's not necessarily the same person, but hey, I order pizza on Fridays, so why not?
Well, the other thing, Jim, to that end, what are the risks here?
Well, one big risk is that when you change a habit, when you try to change a habit that consumers have had for 60, 70, 80 years, that will confuse them. That also can make them think, well, I've done this way before. Well, maybe if I'm going to have to do something different, maybe I will try something different. Maybe I'll try an online pharmacy. Maybe I will try some other place. Maybe I'll get my pharmacy needs done at a Walmart. Walmart's been very aggressive at expanding pharmacies in all of its major stores. And, they don't have the same potentially they don't have the same hours that some drugstore chains do, but especially since the pandemic, a lot of the hours that 24-hour pharmacies have been cut back. So that actually is something that now other types of retailers like a Walmart can compete on. It used to be you could say, oh, my local CVS or my local Rite Aid is open 24 hours. If I get sick in the middle of the night and go there, I can't do that at my Walmart. Well, nowadays, a lot of pharmacies are actually closed after 6 p.m. on the weekends. Right. A lot of pharmacies are not open at night. And so therefore, it's not that different from an opening standpoint than you could do at a big box store.
Jim Ellis, really appreciate you joining us. Bloomberg Business Week Assistant Managing Editor. He's the editor on Fiona Rutherford's story, which is available in the new issue of Business Week magazine. It's on newsstands, on the Bloomberg terminal, and at bloomberg.com/businessweek. Up next, we drive to the close with Dana Dioria over at InvestNet. But first up, let's get a check on the latest world and national news with Amy Morris in the Bloomberg 99.1 Newsroom in Washington, D.C. Hey, Amy.
Hi, Tim. The Israeli military says its troops in Gaza found the bodies of 3 Israeli hostages killed by Hamas in its October 7th attack. The military says all 3 were killed by Hamas while fleeing the Nova Music Festival. It's an outdoor dance party near the Gaza border. The military did not give immediate details on where those bodies were found. The International Court of Justice at The Hague has heard Israel's response to South Africa's accusations that Israel intends, with a planned major offensive in Rafah, to, quote, wipe the Palestinians off the face of the earth. A member of Israel's legal team says South Africa has it wrong and that Israel wants to destroy Hamas and its hold on Gaza.
Only by bringing down Hamas's military stronghold in Rafah will Palestinians be liberated from the clenched grip of a murderous terrorist regime, and the road to peace and prosperity may finally be paved.
South Africa presented its case to the UN court yesterday, describing Rafah as the final stand. There's growing fear over a surge of illegal immigration coming from halfway around the world. ICE Director P.J. Lechleitner says people from China seeking asylum are showing up at the southwest border.
Absolutely. It does raise concerns just whenever there's a large increase in numbers concerned with who these individuals are.
ICE Director P.J. Lechleitner says there was a deportation flight in March. He hopes there will be more. He says more than 24,000 people, mostly single males, have flooded the border from China in the past few months. And top-ranked golfer Scottie Scheffler was arrested this morning on his way to the PGA Championship in Louisville, Kentucky. Scheffler says he misunderstood what he was being asked to do and that he did not intend to disregard police directions. The Masters champion was arrested for not following police orders during a pedestrian fatality investigation. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
3:40 on Wall Street. We do check markets all day long here at Bloomberg. We are looking at a mixed market. We are on track for another up week, 4 in a row. But right now, let us head over to the first word breaking news desk for the afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks are trading mixed in a choppy session today. The Dow's currently up 115 points. S&Ps are higher by 5, while NASDAQ is still lower by 13. The U.S. 10-year yield at 4.42%. Gold is higher by 1.6%. Oil is in the green. And Bitcoin, that's up by 2.2%. Among the main 11 S&P sectors, leaders were energy and materials. Tech and consumer staples were under pressure. And leaders to the upside in the Dow, Caterpillar and J.P. Morgan, while Amgen and Verizon led to the downside. After earnings, Applied Materials was little changed. And in other news, Reddit rose 10% on its pact with OpenAI. Wrapping things up, GameStop fell another 22%. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. Have a great weekend, and to hear live breaking news over your Bloomberg, type squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
It is Bloomberg Business Week, and believe it or not, we are only, wow, look at that. Is that right? 18 minutes from the close here. Time flies, Shonali Bassick, when you're having fun.
Time does fly when you're having fun.
Well, let's see what our Drive to the Close guest has to say about everything that happened over the last week. Dana Dioria is Co-Chief Investment Officer at Envestnet. It's a provider of technology to banks and RIAs. Think wealth management software and consulting services to financial advisors. Dana joins us from Pennsylvania this afternoon. Dana, good to have you with us. I want to talk a little bit about the CPI report that we got earlier this week. Once again, I've said it many times before, and I'll say it many times again. It's not the Fed's preferred measure of inflation, but we still saw a pretty big market reaction to it. What did you make of that?
I make of it that it's an overreaction. Thank you for having me. I think the market has, kind of overshot most of these reports that have come out, and, assuming, right, that the reaction is really confined to that report. We started the year at the expectation of 6 rate cuts. We're living in this world of bad news is good news. So, the fact that not only do we see some indicators in growth kind of, maybe plateauing a bit and a little bit more muted, something like having inflation come in, this report inflation, and particularly core inflation coming in better, right? Not fantastic. I don't think, in line with what would rationalize rate cuts, but enough that the market can latch onto it and say, look, maybe it's 2, it's not just 1, maybe it's September, it's not November.
So you were kind of talking here about this idea of bad news is good news. And I want to ask you a question that I don't think we ask people enough, which is when bad news starts to hit the table a little more, yes, in the early terms, we have seen the market really react well to it because of the idea of rate cuts. But how much of that is already priced in? When will bad news just start to feel like bad news?
It's such a good question. I do think that we've had a pretty poor scenario priced in, particularly for areas of the market that we don't talk about as much, like small caps. So obviously we have a market, there's more than enough discussion around the fact that we have a very concentrated market, dominated by the top several stocks, and you can, cut that line wherever you like. But when you look at something like small caps, which are, more interest rate sensitive, they are needing to go back to capital markets more frequently. We have corporate debt rolling over this year, and it really does matter to those corporate teams, how quickly that rate cut comes. So it's understandable that there's a higher beta to interest rates there. But I think that, you've seen those areas of the market certainly struggle with respect to, the larger, and this is the larger stocks, and this has been going on for a while. So I do think there's sort of a pretty negative outlook priced into that already. And that's one of the reasons that, any sign that there might be another rate cut or that it might come faster can have a nice bump, a nice impact on stocks like that because they are, kind of more maybe prepped for the worst.
Dana, what are you seeing right now on the platform when it comes to cash? And the reason I ask is because we're still waiting for that cash on the sidelines to go somewhere. And
yeah,
I'm wondering what you're seeing in terms of cash and if you started to see allocations change from those folks who say, okay, well, we do know rates are going to go down at some point, so we want to get ahead of that and deploy this cash now. What are you seeing?
Yeah, cash is high. We've seen cash and short-term instruments in general, which, the short-term instruments are part of asset allocation, right? So if you think about how money gets deployed on our platform, a lot of it is deployed by independent financial advisors or by financial advisors that are connected with broker-dealers. And then you also, of course, that I would say is differentiated from money managers, asset managers broadly distributed, where an advisor may be outsourcing that decision making to the money managers. So to an extent, some of what you see is client directed decisions for that particular client, that particular account. And then some of it is asset allocation decisions that are really cascading out from a series of models. Having said that, cash short-term instruments are high. Obviously, you're getting a return there that you haven't gotten in a long time. So it's understandable that, people are kind of parked there and earning these higher rates. I think as part of, if that short-term instrument is part of that overall asset allocation decision, it can make sense. I think where it begins to become a struggle is if it's money sitting on the sidelines, money that's, maybe longer term money that typically that client, that investor has a risk tolerance that would allow for it to be taking some equity market risk. If you look at that kind of money where maybe they pulled it out of the market from a timing perspective and now it's just sitting there, the problem there, of course, is that, fear of losing out, you're definitely losing out, right? If you look at what equities have been doing over the course of the last year, if that money really was better situated in a 60-40, you've given up a lot of returns sitting in cash.
Well, it's interesting, too. You have to wonder what things look like, not just now, but 6 months from now. If you're worried about the volatility, how do you play the market right now? Perhaps people are sitting in cash just because they're scared.
Yeah, no, you're absolutely right. And that's a typical thing, right? It's why the adage is always, it's not even just timing getting out, but it's timing getting back in. And what happens, and so often we see that people miss out on the opportunities because they're sitting there for understandable reasons. They're kind of waiting for a shakeout that may or may not materialize, but the timing of that shakeout is difficult. So what I would say is, if you're in that camp, you want to deploy money in the market, but you want something a little bit more protective. There are some strategies that, number one, you can go out a little bit on the curve on fixed income. You can have, as opposed to just cash, you can be taking some interest rate risk, some credit risk. And still you're sitting in a fixed income investment. And then, of course, if you are putting money into equities, but you're trying to hedge your bets a little bit around maybe some of the, very risk on quality, fundamental indicators like quality, technical indicators like low volatility, minimum variance portfolios are a nice place to be. Traditionally have delivered higher return per unit of risk over time, have outperformed over time. So those are typical places. I talk too about, and a lot of the folks I talked to in the industry point out that if you have small caps, which I've long stated, and this is a longer term play, right? This is not, we're going to talk in a quarter and it materialized, but longer term, small caps are a nice place to be, particularly small value, because they tend to outperform inflation over time. They tend to outperform in general over time. You have to have the stomach and the time frame. But if you like having some diversification in small cap quality is a place that folks are looking. So like, a 600, right? As opposed to,
Dana, I'll always love it when you join us. Thank you so much. That's Dana Dioria, Co-Chief Investment Officer over at Envestnet. They've got a unique view into what clients are doing because they provide tech to banks and RIAs like wealth management software. They do consulting services also to financial advisors. Well, taking a look at the markets as we do almost count you down to the close. The Dow and S&P 500 are both higher, while the NASDAQ Composite down a little more than 0.1%. Beyond the Bell is coming up right after this.
Company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Apple is reportedly developing a significantly thinner version of the iPhone. That's according to the information, which says it could be released as early as 2025. Apple shares today, they are trading little change right now. We got Apple up by just under 0.1%. Some of the other stories that we're following, Reddit shares are rallying today. Reddit right now up by an even 10% after forging a partnership with OpenAI that will bring its content to the chatbot ChatGPT and other products, while also helping the social media company add new artificial intelligence features to its forums. Mandeep Singh is a senior analyst with Bloomberg Intelligence.
I think OpenAI probably needs Reddit data more, simply because you have to constantly train these LLMs. I mean, Reddit has almost 1 billion posts a year. Look at the magnitude of the user-generated content. So yes, OpenAI has the most powerful LLM out there, but LLMs needs these large data sets. And that's where Reddit is one of the most coveted data sets on the open internet.
Mandeep Singh of Bloomberg Intelligence. Chevron's $53 billion deal to buy Hess Corp has received a nod of support from a major proxy advisory firm that said shareholders should vote in favor of it. Glass Lewis issued a report saying that while some aspects of the merger are less than ideal, Hess shareholders will have the opportunity to participate in the potential future upside of the combined company through newly issued Chevron shares. Chevron right now higher by 1%. Hess Corp shares, they're up by 1.2%. And those are our top company stories at this hour. I'm Charlie Pelletin. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
It is Bloomberg Business Week. Tim Stenevec and Sonali Basak in for Carol Messer this afternoon. Sonali, one of the most read stories on the Bloomberg terminal is a story by our own Tiffany Carey, who covers tobacco, psychedelics, marijuana, a lot of the vices that we talk about. She's got a story out about Zen. Have you heard of this?
No, I hadn't.
Okay, I had heard of it, but only on social media because I follow like some, Wall Street meme accounts. And apparently they're big on Wall Street with the young analysts. But it's a hit nicotine pouch made by Philip Morris International. It's out of stock with multiple retailers who ship nationwide and some wholesalers who are also reporting that they're having difficulty getting the product.
It's pretty fascinating here because, of course, we have seen these kind of, how do you call it, cigarette substitutes
Yes.
really take off over the last
decade or so.
Yeah, I was going to say, is it dating us to say that?
No, it's true with like, what was
Juuls
the,
were
Juul.
the big thing for a while
And
there.
now there's like another one. I'm so out of my element here, but the
if
little
you had to name your
candy bar
own
things.
cigarette substitute, what would you name it?
They have people they hire to do this, like the branding
Zyn,
people.
Juul.
Zyn Juul. Well, there's another Zyn alternative called On ! And then one called Nico Kick.
How would you
Well,
know?
Nico Kick is a website that helps consumers find Zyn alternatives.
How would you know if you were chewing nicotine or buying sneakers?
No, yeah, that's a good point. Maybe it's to kick nicotine. I don't know. I have no idea. The point is, this stuff is really popular right now. Zyn is an important source of growth for Philip Morris International because, like you said, cigarette smoking has declined and vapes are increasingly dominated by unauthorized products that are made in China.
But this is actually a nicotine pouch, so
Exactly.
what's interesting to me, there's also a lawsuit here that products nicotine content, and there's a lawsuit about it and growing criticism about the marketing practices. Listen, all of these products, they have been, to your point, important products, but even the substitutes have come under scrutiny themselves, yet, as you say, they are sold out.
Check out this story. It's a most read on the Bloomberg terminal about the shortage when it comes to Zyn. It's the oral nicotine pouches that are selling out as demand surges. Just a couple of minutes away from the close on this Friday afternoon. Looking like a mixed day, but an up week with the S&P 500 set to close higher by about 1.5% on the week. Don't go anywhere because Countdown to the Close starts right now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Alex Steele. We're counting you down to the closing bell. You're here to help take us beyond the bell. It's a global simulcast with Tim Stenevec and, Carol has a day off. Sonali Basak in for Carol Messer, who is taking a well-deserved, once again, 4-day week. Welcome to all of our audiences across all of our Bloomberg platforms. Sonali, how are you feeling?
I'm feeling good.
All right.
I am very much here for you today, Romaine.
Thank you. Somebody is. Tim, how about you?
I'm feeling good as well. I'm also here for you, but I'm also wondering where the action is when it comes to the equity market today. And I think kind of everyone, after it was a big week, thanks to a couple Fed-friendly economic data prints. But I think people are taking a step back, Sonali, and saying, okay, well, Wednesday we get NVIDIA earnings. That's like the next big catalyst for big moves.
Yeah, and in the middle of the week, it was kind of like everything is fine, everything was exuberant. You had some key moments really pass the market, but there was divergence in indices today. And when we looked at the bond market, we are back above 480, guys. I was looking at that 480 level all week and seeing if we were going to breach it, and indeed we have, although still some optimism there in the bond market around the potential for cooling inflation and lower rates ahead.
I just feel like the equity market just doesn't care. about the bond market, like whether they move in tandem, and you have seen that happen this week, or you see higher yields. I mean, it feels like if we're going to set up for a range, anything below 5 for the 10-year seems to be something that the equity market can digest at this point.
Yeah, that's the thing. I mean, we keep pulling our hair out over what the Fed's going to do next, what's on warp. And look, I get it. I get that there's got to be some sort of awareness as to what the Fed does next, but I don't know. I mean, we hit record highs yesterday. It looks like we're, at least on a couple of the indices, we're hitting another record highs here. So I don't know if 5.5 didn't break this market, and that's the velocity to 5.5 didn't break the market. Why is staying at 5.5? Why am I supposed to believe that's going to break the market as well? Let's walk you through the numbers here, because a relatively good day and an extremely good week here. The Dow Jones Industrial Average would spend a good portion of the day in the red, and yesterday traded above 40,000 but could not hold that level into the close. Now looks like it is going to close at that 40,000 level. You like nice round numbers? Well, you got one. Yeah, put your hat on, Alex. You finally time to wear it. 4,004.41. I don't know if your hat just says 40,000 or if you were precise enough to pick that, but that's good enough for a 0.3% gain on the day. The S&P 500 back above 5,300, 6 points higher, 0.1% on a percentage basis. The NASDAQ composite, though, is going to finish the day in the red, but only fractionally down about 0.1%. Similar story for the NASDAQ 100 and the Russell 2000. We're just going to call it unchanged on the day, lower by a fraction of a percent, but we should point out all the major indices posting weekly gains.
Taking a look at under the hood of the S&P 500, we did see 290 stocks move higher on the day today. 211 ended up moving lower, Alex. So not quite equally split, but pretty close.
No, but it's really the cyclicals that are doing it today for the S&P. I'm taking a look at IMAP right now. So energy is up by over 1%, outperforming the rest of the sectors within the S&P. Then you have materials, obviously driven by what we're seeing in copper and gold and silver. And then you have the financials. Financials are up by about 0.6%. So from that perspective, relatively broad-based. On the negative side, you get tech actually underperforming, information technology down by about 0.5%, consumer staples, and real estate trading a little bit light as well. But it's so hard to make a lot of hay out of what we're seeing, to be honest. And Romaine, I really do agree with you too, that if we got past certain hurdles for the bond market, and if earnings continue to deliver and earnings growth and sales estimates continue to rise, how do you not buy stocks at this point?
Yeah, I can just say, though, I am a little worried. And you want to know why? Because I feel like the earnings season's over, right? The economic data is kind of coming to a trickle. So is this all going to be just like hopes and dreams that people are going to buy, or do we have to kind of wait for, I guess into July when we get into the next earnings cycle or something like that? I don't buy into the whole sell in May, go away, but it does kind of make you wonder what is going to be the upside catalyst.
I think maybe NVIDIA next week, maybe it's June 12th for the next Fed meeting. We're already looking ahead to that. And a lot of Fed speakers between now and then, too. So, yeah, we'll see what actually moves markets. One thing that did move today are the gainers that I got an eye on. And I want to talk a little bit about Chubb because it had its best two-day period going all the way back to 2020, thanks in part to what Warren Buffett did over the last few months, thanks to a 13F filing that we got to peer into on Wednesday afternoon. Berkshire Hathaway building that stake in the company. Shares higher once again today, finishing higher by 3.6%. Chubb shares hitting another record, and they've added more than $8 billion of market value in those 2 days. Chubb also did say in a statement yesterday that shareholders approved a boost to its dividend. I want to talk about Reddit because Reddit shares surging today. This after the company said it forged a partnership with OpenAI that will bring its content to ChatGPT and other products, while also helping the company add new AI features to its forums. According to a statement from both companies, this agreement will, quote, enable OpenAI's tools to better understand and showcase Reddit content, especially on recent topics. So what the deal is going to do, it's going to allow OpenAI to display content from Reddit and also train its AI systems on its partners' data. We should note that Reddit's content has long been used to train data for AI models, including those of OpenAI. It's something that they talked a lot about in the run-up to the IPO just a couple of months ago. And finally, shares of Robinhood. Reddit up by 10% today. Shares of Robinhood also surging. They had their best week of the year because the meme stock mania just continues to grip markets. 12% higher on the day today. Bank of America actually raised their recommendation on Robinhood to buy from underperform. The analysts noted that rising retail engagement and accelerating organic growth will drive 2025 and 2026 earnings up. So maybe meme stock Shanali are here to stay?
Perhaps they are, actually, and we'll talk more about that in just a second here. But I do want to talk about what was down on the day because, of course, under the hood, we know that the picture was a little mixed. I want to start here with Paramount. You did see this being the worst decliner here in the S&P 500, shares down about 4.9% or so on the day. And, of course, we know Paramount has been caught up in that acquisition story, what happens to the future of it. And, of course, there's just kind of other news going on in Hollywood here. A union representing laborers are in talks with the studios on a new contract for stagehands, and that will resume in early June. So a lot of news on the front for entertainment. I also want to show you Lam Research because it was interesting. One of the indices that was down on the day was the Philadelphia Semiconductor Index. Interesting to see it down ahead of NVIDIA earnings next week. NVIDIA also down today, but Lam Research down even more and was a drag on a couple of indexes on the day a little bit. Now you have it down around 3.3% on the day today. Another one I want to point out here is Sun Power. This is where the meme stocks come back here because, of course, this was a meme stock-driven stock this week. You have seen it take a leg lower after a rally of more than 90% over 2 days. At one point, it was down more than 23% on the day. Now down around, closing around 13% or so. And there was an analyst cut as well at Wolf Research, downgraded the recommendation on the stock to underperform here. The stock will come back to reality once the short.
I was looking at some of the other names too. I mean, obviously GameStop is down, but like Faraday Futures, that was down 38%. Fisker is down 16, 17. So it looks like a lot of these names. I mean, it looks like some of them still posted weekly gains, but nowhere near those big jumps that we saw, Alex, at the start of the week.
Yep, aren't taking a look at yields because, the one thing that also down is the bond market. So yields popping higher a little bit here, ending the week. Interesting kind of round trip. If you take a look at sort of the moving averages, the 2-year yield closed above the 50 and 200-day moving averages after kind of blowing below them earlier in the week. Plus the 10-year is sitting right at that 50-day. And I bring all this up because how we then open on, Sunday night and Monday morning could be quite interesting depending on where the technicals kind of suss out. But you are definitely seeing the propensity for higher yields despite stocks and bonds moving together earlier in the week.
Yeah. Okay, it's Friday afternoon. I know, you're getting ready to go to your Hamptons place, everybody. But if
I'm going to Romaine, so that's fine.
Yeah, that's where I go to because I don't have one.
Alex and I are way too crunchy to go to the Hamptons. Please.
But if we were in Florida, maybe we'd be getting ready to go to the Hamptons of Wall Street South, which is not going to be West Palm Beach.
No.
It's actually going to be
Cocoa Beach,
an island in the Bahamas.
In the Bahamas?
Yeah, that's if a developer has his way.
Like a
Raphael
jitney that takes you there?
Yes.
I mean, how do you get there?
There are fast ferries. You can take your helicopter. I mean, there's options.
You can take
you
your
could
boat.
take your own boat.
Yeah.
People would just take their own
my own
boats
boat.
and
take your own boat.
Why didn't I think of that?
You could buy a cheap boat, too, and just take it down there, too.
Yeah, sure. Thanks, Chanel. Why not?
You know what, though? It's actually pretty close to parts of Florida. It's like, if you're not stuck on Hamptons traffic on a weekend, instead you can take your helicopter from Miami or Wall Street South, Chenali to this island.
Oh, yes.
New York. How long does it take to get from New York?
Yeah, you got to fly down there first. Depends on the mode of transportation, Romaine.
No, okay, I'm just saying, there's a jitney right outside the office.
Yeah, they got to wait in line, then you got to sit in traffic. So anyway,
can't they just do like one of those duck boats and they could just, just take us right out to shore and just sail away?
It's hard with all our luggage. But this is a really interesting piece. You guys should definitely read it. It looks like it could be beautiful. The island would be called Bimini. It's like 48 nautical miles off the coast. Like this is the Hamptons for the ultra rich down in Wall Street South.
I'd do it.
I know people who have done it, but the worry here is that too many people do it. Once people find out about something, it gets less fun when everyone's there.
It's tough stuff. It's tough stuff.
Haven't they been saying about the Hamptons for the last 40 years?
All right, well, we're going to see all you guys at Romaine's a little later this weekend.
Please, please
stop by. Ginny right now.
All right, that is going to do it for Beyond the Bell. It's our cross-platform coverage of the market, close on Bloomberg TV and radio, Bloomberg Originals in on YouTube. Have a great weekend, everyone. We'll be back same time, same place on Monday.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
It is Bloomberg Business Week. Tim Stanovic and Sonali Basak in for Carol Master this afternoon. You just heard us talking about some of the big themes of the week, including the return of the meme stock, a Dow that closed above 40,000 for the first time ever today, a bit of Fed-friendly data when it came to retail sales and CPI, Walmart earnings that sent shares of the company to a record, and the president unveiling sweeping tariff hikes on a range of Chinese imports. Just some of the week that was in this economy. And the backdrop for tonight's episode of Bloomberg Wall Street Week with David Weston, coming your way at 6 p.m. Wall Street time on Bloomberg TV and at Bloomberg Radio. We welcome in David Weston, host of Bloomberg Wall Street Week here in the Bloomberg Interactive Brokers Studio. So, David, I mentioned just some of what moved markets this week. How do you think of this as the backdrop for tonight's episode?
Well, let's start with two of them you mentioned, which is the Fed-friendly and data that we got out and how the markets reacted to that. Because obviously the markets reacted a lot when we got those CPI numbers out that were somewhat encouraging. And also the retail sales numbers, which were more subdued, which encouraged people. And so one of the things we did was we had Rick Reeder on, one of our favorites here from BlackRock, who came in to talk about those numbers and how we should interpret them. And I started out by asking him, services inflation is different from goods inflation. We've got plenty of one and not much of the other. Does it matter? Does the Fed really discriminate between the two? And this is what Rick had to say.
Listen, you want to get the average, you want to get inflation down to around the 2% number. Their mandate is price stability. It's not 2. If you're running 2.5, core PCE is now 2.8, but it's pretty stable. We think it'll be pretty stable throughout the year. If you've got a good economy, nominal GDP, so if you take 2.8 of inflation, you get real GDP of 2. You got nominal GDP of 4.5 to 5. Pretty good. I mean, it's a pretty good environment. People get horrified. We got to get 2.8 down to 2.5. As long as your price stable, employing a lot of people, growing the size of the workforce, and moderating a little bit on the growth side, it's pretty good.
Some people have been surprised, I think, that the economy has not reacted faster to 500 basis points in interest rate increases. Some of that is because you can term out the debt, as some people do. And one of the things that we've seen recently is a difference for households between what they owe on their mortgage, which is a longer-term thing, and the shorter-term debt, such as credit cards and auto payments.
So, son, I'm not certain that raising interest rates actually brings down inflation. In fact, I would lay out an argument that if you cut interest rates, you'd bring down inflation.
And that's the point that Rick made that got a lot of people's attention. And he goes on and really explains why he says that is. It sounds almost like Erdogan over in Turkey, doesn't it? I mean, you want to cut the rates in order to get inflation down?
I mean, it goes against basic economic theory.
But we have a number of charts we show and explains exactly his thinking, which is what's really keeping the inflation up right now is the higher income spending a lot of money, particularly on services, travel, and things like going to Bimini, maybe, for things like that. Exactly. Right? And that's what's really generating. Whereas, in fact, the lower income levels are cutting back on their spending a fair amount. So it's really that K-shaped recovery they talk about. And he's saying what's really stimulating this is the fact that a lot of people who have savings, who have investments, who have their own bonds and things, they're getting more and more money. They're getting paid real money on these things.
Good point.
And they have more money to spend as a result.
I will say his comment, Sonali, to David for Wall Street Week, the topic of one of the most read stories on the Bloomberg terminal.
Well, it's
today.
fascinating. That kind of chorus is getting louder, isn't it? There was a conversation I was having with Constance Hunter earlier this week about this idea that if you cut rates, then the mortgage market starts to ease up, and maybe housing prices can eventually fall too. And so what else was he really saying here about the trajectory here? Because you could see a scenario in which this kind of call gets louder.
Yeah, and let's be clear. I mean, Rick said what he said, and he believes it, and he has data to back it up. He's not in a panic. I mean, he thinks basically these numbers are good numbers, that this is encouraging. And particularly if you're in fixed income, he calls it the golden era of fixed income, where you can get some real returns right now with very limited risk as a practical matter. And he says that's pretty good.
Can we talk about another golden era here for a minute? I think every investment banker around here is waiting for the golden era of M&A to come back. And you also spoke to Paul Taubman, which is so near and dear. I covered his IPO. And so that bank went a long way. It's one of the hottest investment banks on Wall Street now. What did he have to say about how fast things can come back?
Yeah, as you say, you know Paul, and he really is a very smart investment banker. And he says, look, all the other markets pretty much have recovered except for M&A. M&A is the one. And so we ask him, well, why is is M&A the one? And he said, number one, interest rates, particularly because of their effect on private equity, because that generates a lot of that M&A activity, and they're subdued right now. But he also said antitrust. He said it has a real chilling effect for this administration. Now, he's hopeful that in the next administration that will change, whether it's President Biden or President Trump. He said if it's President Trump, he'll back off. If it's Biden, he thinks he will not press as hard as he was before, and that basically get unlocked. But that's what he thinks is going to happen. But as you say, he's been very, very active, particularly in the spinoffs and the restructurings, including the GE Vernova deal, which is a very big deal, that he thinks is a way of the future as companies seek to focus, as he would put it.
Hey, speaking of the president, he unveiled sweeping tariff hikes this week on a range of Chinese
102.5%. You think that's sweeping?
I think it is. And you know, I talked about this with Abigail Doolittle a little earlier. It seemed to sort of, she mentioned it was well telegraphed to the market, but the market didn't seem to react to it. It's like tariffs are, since the Trump administration in this most recent wave of tariffs, which I would say began with him and continued with President Biden, the market hasn't been reacting quite as much as they did a few years ago.
Yeah, and maybe we're getting used to them. But the other thing, we had Elizabeth Creer on, who is with JD Power, and she oversees all their research into EVs, electric vehicles. And he said, don't get too excited about this. Number one, they aren't importing any of the Chinese EVs so far anyway. Number two, they're the really low-priced ones, and that's not much of the U.S. market. The U.S. consumer is not yearning for those. They want SUVs. They want trucks.
They don't want those three-wheeled things.
No, they don't want those things. But number three, they've done a lot of research, and the reason why Americans say they are reluctant to buy EVs is all about the charging stations. It's all about the infrastructure. That's their number one concern. It's not cost. And you read that against what happened with Tesla when they laid off the entire division of supercharger. Said that's a bigger issue than 102.5% tariff.
Interesting.
What are the other implications here of the tariffs beyond EVs?
Well, you mean other tariffs that they imposed?
Well, for investors, how do people look at, because there's the tariffs themselves, and then there's the rhetoric between the U.S. and China too.
Well, I mean, I don't know what investors are thinking, but what they should think is they better batten down the hatches on China talk for the next few months. We got 6 months of this to go.
Are you saying it's political, David?
No, I would never suggest that. But clearly, I mean, the one thing that there's bipartisan agreement on in Washington right now is we don't like China. You know, and so nobody loses any votes by saying nasty things about China. I think the important question that you're asking, Shanali, is, okay, once you get past November, then what do we really do? Because this is the second largest economy in the world. And it's not an option to just say we're not going to deal with this. This is not the Soviet Union in the 60s, which was not a particularly big economic player. We have to deal with China. The question is, how do we deal with it? And thus far, I'm not sure I've heard either side explain exactly how we do that.
Hey, David, I want to end just going back a little bit in time. You weren't with us last Friday because you were at the Milken Institute Global Conference in Beverly Hills. I was surprised to learn that it was your first time actually going there.
It was.
What were some takeaways of conversations that you had? Not necessarily ones on Wall Street Week, but you ran into a lot of people there, I imagine.
The main thing is
It's impossible not to.
Shanali's a pro at Milken. She's been to an awful lot of them. The main thing I heard from people behind the scenes, as Shanali knows, it's largely an opportunity for general partners to meet with limited partners. And limited partners in the private equity space right now are a little impatient, because there's been a lot of extensions, these continuity funds that they're doing, and they're saying these investment funds, the investors, the pension plans are saying, when do we get our money back? And the PE guys are saying, not so soon. And there's a fair amount of
You're speaking straight to my
hostility,
heart, David.
right? Well, you know this.
You are speaking straight to my heart.
And if you think about it, I had not thought about this before. You would have, Shanali, I'm sure. If you think about it, a lot of these people are pension plans. They have good jobs, but they're reasonably paid jobs, dealing with people who make a fortune.
Billionaires.
And the people who are making a fortune are saying, oh, no, we're going to hold on to your money a little longer. And the pension plans are saying, we need it.
It's absolutely the dynamic. I couldn't have said it better than myself.
David Weston, he is coming your way at 6 p.m. at Wall Street time on Bloomberg TV and Bloomberg Radio. Don't miss it. It is Wall Street Week, tonight at 6 on Bloomberg TV and Bloomberg Radio. This is Business Week.
4:21 on Wall Street. We do check markets all day long here at Bloomberg. First close ever for the Dow above 40,000. 40,003, up today by 134 points. That is a gain of 0.3%. S&P 4 weekly gains in a row, up another 6 points today to 53.03. That's an advance of 0.1%. NASDAQ fell 12, a decline there of just about 0.1%. 10-year 4.41% with a 2-year that's yielding 4.82%. Spot gold up 1.6%, 24.15 the ounce on gold. West Texas Intermediate crude up 0.9%, 79.96 a barrel. Reddit is in a partnership with OpenAI that will bring its content to the chatbot ChatGPT and other products, while also helping the social media company add new AI features to its forums. Reddit shares rallied today by 10%. Again, recapping, the Dow, the S&P, both advancing. NASDAQ in the red. NASDAQ lower, little change, down less than 0.1%. The Dow, though, 40,003. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Shanali, have you been to Nashville, Tennessee ever?
Sure have.
Oh, why did you go?
My boyfriend's parents live there.
Oh, I thought you were going to say a bachelorette party, because that's where everybody seems to go for bachelor and bachelorette
It's
parties.
great for music, too.
It is great for music. In fact, it's actually one of the fastest growing cities in the country. And recently, the Nashville Metropolitan City Council selected the Fallon Company to be the master developer when it comes to a huge deal for the city. It's a multi-billion-dollar mixed-use neighborhood called Nashville's East Bank, and it's set to reimagine 30 acres of dormant lots. We got with us Michael Fallon, the Chief Executive Officer of the Fallon Company, joining us from Boston. Mike, good to have you with us this afternoon. How are you?
Tim, I'm great. How are you?
We're doing well, thanks. Really appreciate you joining us. We love talking commercial real estate and real estate in general on the program. And I want to start big picture right now, because you're coming to us from Massachusetts. You've done a lot of work in the Boston area. How would you describe commercial real estate and the environment for a developer like yourself right now?
Well, right now it's challenging generally in the market. I mean, looking at cost of capital, that's been the biggest change over the last couple of years. But that and post-COVID, the post-COVID world with office space, I think you probably talked about it quite a bit.
Oh, yeah.
People are trying to figure out how to convert space. That along with housing challenges, affordability. So all of like the main top line things that you'll hear about macro wise.
So then enter this huge development happening in Nashville that I was just speaking about, the development that you've been awarded at the Fallon Company. How do you pencil in numbers in a high interest rate environment and make a development like this work?
Well, the market's all about timing and location, right? The timing right now is it's a great time to buy. The structure with the city of Nashville, with Nashville Metro, it's a ground lease. So that affords some optionality in how you phase the project. We do larger scale, mixed use urban projects, which are going to be phased over a course of time so we can time the markets and the cycles. Right now, Nashville couldn't be hotter for both residential, but hotel and obviously the retail. If you were there for this, as you mentioned earlier, bachelorette parties, different festivals, different music events.
Very good food too, I should say.
Oh, great Southern food. But to get directly to your question, how do you pencil? Well, Nashville's got a very, very, I would say, a business-friendly climate where the city's reinvesting in infrastructure, transportation infrastructure, infrastructure for new development. So the East Bank, which is parking lots, not all of that infrastructure burden is necessarily covered by us, the developer. There's the $2 billion Titan Stadium, which will be next door, that will cover some of it, and then some other civic institutions as well.
So how do you feel about the growth of the area? You know, on one hand, we were just talking about how Nashville is very clearly a fast-growing area, a lot of people moving there, a lot of businesses moving there as well. But how vulnerable is the area to things kind of slowing down at all? If you're building commercial real estate, kind of thinking through how to navigate any potential volatility here in this short-term kind of upward trajectory.
Ton of volatility in the short term across the board in every market, for sure. Nashville's not immune to it. Certainly in the apartment market, there have been a lot of buildings that have come online in the last year and will continue for the next year. But when we look at developments, we're looking at multi-year deliveries. So we're looking at deliveries 4 or 5 years from now. And the cycle for this project is it's 30 acres. So we're looking at a 10, 15-year horizon. When we're looking at that, we're looking at the main drivers of Nashville. Obviously, you've got education with Vanderbilt and Belmont and Tennessee State, but healthcare, huge. A massive driver for Nashville, along with tourism.
How are you thinking about some of the surrounding areas that have seen a decline in rents as a result of sort of the cooling of the post-pandemic boom that we've seen in the last year or so? Sunbelt areas, in addition to that, Austin, Phoenix, not necessarily surrounding areas, but areas like Nashville that saw explosive growth during the pandemic. How do you look at those? I know you're longer term, but how do you look at that?
Well, we look at that and we try to isolate the noise from what's, the baseline. So we saw such a run up so quickly during COVID that we think that was probably an anomaly. So now we see more of a normalization, probably slightly different than Austin or some of the Florida markets. We think Nashville has a lot more runway. Again, the apartment market, definitely there was a lot of building over the last few years and a lot of supply coming online relative to what's been in Nashville. The long-term drivers, we wouldn't be making the investments that we are, and neither would other large companies unless we saw the runway. Sunbelt cities, they definitely had a lot of people pouring capital into them very, very quickly. So normalization, ordinary course of action for us, but priced into what we're doing.
I know we've been talking about why Nashville for a minute here, but I guess I want to double down on the question here because clearly, you're speaking to us from Boston. Why is Nashville becoming an attractive area versus some of these other big cities that you've mentioned?
Well, we actually started in Nashville in 2019. So this process for this project took a long time. This isn't the only project we're doing in Nashville, but we left Boston, or not left. We expanded out of Boston in 2016, and for a lot of the reasons you might think, looking at business environments, ability to develop, how crowded the marketplace was, and ended up doing Charlotte, Raleigh, and then Nashville. Nashville, I would speak to in 2019 pre-COVID, the drivers are probably pretty similar to what we were seeing post-COVID. The difference during COVID was I would say the boom in tourism spending. That was so much more. And that's actually stayed pretty steady. But even if it, again, normalizes a little bit, comes down a bit, it's still way above trend for what Nashville was 5 years ago. As long as infrastructure can keep up, which they're doing, they're reinvesting, the state's reinvesting, another airport runway. Those are the kind of moves that make us comfortable.
Hey, Mike, what do people want in a redevelopment like this in 2024 and, in the coming years? Talk to us a little bit about not just amenities, but pedestrian access, what streets look like, vehicles not being present, those sorts of things.
Well, thanks for asking. Yeah, it's over the past few years, I'd say sustainability has become a big topic. This site's right adjacent to the Cumberland River. So the Cumberland River does flood, so you have to make sure that you're building for those events.
Okay.
That's one aspect, green building and sustainability. During COVID, I think we found a lot of people wanted to get outside more. So having more accessibility with outdoors, especially in climates like Nashville where it's warm for the majority of the time. The office buildings are kind of a separate set of amenities. Those are less, I'd say, offices and more kind of congregating areas right now. That's kind of the trend. Hotels, bars, restaurants in Nashville, they want to be outside and they want to have patios. So in New York City, right, you've seen the sidewalks or the parking spaces get taken over by restaurants. And I think a lot of people see that as a trend that they'd like to see continue as long as you can move around the city. So transit's important. And Nashville's working on a transit plan right now that I believe will go to a referendum soon.
What's the risk of overbuilding here? You go down to Nashville, you see all the areas around the city, and the cities outside of Nashville proper are also growing quite quickly here. Do you think that there's a risk that the city gets overbuilt right now?
There's definitely a risk that you have too many deliveries of buildings that are very similar in too short a time span. I'll always say to folks, growth solves everything in the sense that we have economic growth in Nashville, can support more development. provided that, again, we're reinvesting in transportation, municipal infrastructure, schools, all of that. In downtown Nashville, we're trying to focus on not building commodity products so that we're not competing with every other project. So we're trying to be a little bit differentiated. Things that we're doing, focusing a lot on design. So we're not just doing a box, 40 stories up, trying to create interesting design there. And then underground parking, things that make the building more attractive at street level that haven't been in the city. In New York, you're used to a lot of things that come with density. Nashville's just starting that. And so we're trying to bring those best practices. You mentioned cars and parking and streets. Yeah, we want a lot of green. We want a lot of different streetscape environments, a lot of color, vibrancy, ability to do events, whether it's weekly events or weekend events, things like that.
Mike, we got to leave it there, but thanks for joining us. That's Michael Fallon, Chief Executive Officer over at the Fallon Company. It's a development company, real estate development company, known for Fan Pier over in Boston. He mentioned some of the projects down in Charlotte, including Center South, in Raleigh, North Carolina, Raleigh Crossing, and Boston 66 Cambridge Street, so projects like that. Joining us from Boston. Let's get to world and national news. We got Amy Morris in the Bloomberg 99.1 newsroom in D.C. Hey, Amy.
Hi, Tim. The man convicted of attempting to kidnap then House Speaker Nancy Pelosi and attacking her husband with a hammer has been sentenced to 30 years in prison. 44-year-old David DePape was found guilty last November. He admitted during trial testimony he broke into the Pelosi's San Francisco home intending to hold Nancy Pelosi hostage, and he also admitted to bludgeoning Paul Pelosi with a hammer. Israeli Defense Forces say troops in Gaza recovered the bodies of 3 Israeli hostages kidnapped by Hamas during the October 7th terror attack. Rear Admiral Daniel Hagari.
According to the credible information that we have gathered, Shani Luke, Amit Buskila, and Yitzhak Lerenter were murdered by Hamas while escaping the Nova Music Festival on October 7th, and their bodies were taken into Gaza.
And Hagari says the families have been notified. At least 4 people were killed. A violent cluster of storms rolled through Houston, causing widespread damage and power outages. Schools are closed because of the damage and debris. Houston Mayor John Whitmer is encouraging businesses now to allow their employees to work from home.
I ask everyone to be patient. Look out for your neighbors. It'll take 24 hours for a lot of this power to be restored. Some will require 48 hours.
Whitmer says glass was blown out of some downtown buildings. Trees and power lines were knocked down throughout the city. It's a real mess. Top-ranked golfer Scottie Scheffler was arrested this morning. He was on his way to the PGA Championship in Louisville, Kentucky. Scheffler says he misunderstood what he was being asked to do by police and that he never intended to disregard police directions. The Masters champion was arrested for not following police orders during a pedestrian fatality investigation. He wasn't involved in that accident. He was released a couple of hours later. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
4:40 on Wall Street. We do check markets all day long at Bloomberg. For the first time in its 128-year history, the Dow Jones Industrial Average closed above the 40,000 mark. 40,003 for the Dow, up today by 0.3%. S&P up 6 points to 5303, up 0.1%. Did turn out to be a down day for NASDAQ, falling just under 0.1%. 10-year yield 4.41% with a 2-year 4.82%. Spot gold today advanced by 1.7%. 24.17 for the precious metal, while West Texas Intermediate crude little change, 79.96 a barrel on WTI. Well, as for the overall market backdrop, Dana Dioria is co-CIO of Investnet, and she was a guest right here on Bloomberg Business Week.
There's more than enough discussion around the fact that we have a very concentrated market, dominated by the top several stocks, and you can, cut that line wherever you like. But when you look at something like small caps, which are, more interest rate sensitive, they are needing to go back to capital markets more frequently. We have corporate debt rolling over this year, and it really does matter to those corporate teams, how quickly that rate cut comes.
Dana Dioria of Investnet. Russell 2000, by the way, today lower little change, down less than 0.1%. Again, the 10-year 4.41% as we head into the weekend. Dow Industrials closing just above 40,000. 40,003 up today by 0.3%. Briefly, a down day for those so-called meme stocks. GameStop plunging 19.7%. AMC Entertainment down 5.2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Really do appreciate it. Well, let's say you're watching an episode of Succession and you see that Loro Piano baseball cap that Kendall Roy is wearing, and you think to yourself, yeah, I'd like one of those. So you pull out your phone, point it at the screen, and you're taken to a place to buy said baseball cap. Though it's there, you realize it costs a cool $625 for a baseball cap. So maybe you rethink the purchase. That's not why I'm talking about this, though. I'm talking about the technology opportunity here and the commerce opportunity. That's what ShopSense AI is working on. It's a company that allows people who are watching something on TV to shop on their phones for products that they see on the screen. Glenn Fishback is co-founder and CEO of ShopSense AI. He's here in the Bloomberg Interactive Brokers studio. Did I get the vision right for the company?
You did. It was awesome. Thank you, Tim, by the way. And thank you for having me, Shanali, both of you. Yeah, the vision for us is we want to create like that lean back experience for folks who basically can shop the stream, but can we do it in a more democratized kind of commerce kind of experience? So while you're right, when someone might take a snap in a shop and want to shop that, how do we create similar items and things that are more in line with what they can economically afford? Because, when you're watching all these types of shows, there might be an incredible amount of couture around those various things, but can we make it all shoppable and make it affordable for folks based on whatever kind of economic strata? I mean, a lot of people might even love pre-loved items, and from that standpoint, making it affordable for them. These are the kinds of things in today's world we're trying to do with our technology and working with the various broadcasters.
There are two questions here because both of these worlds are changing so quickly, the world of broadcasting and media and the world of AI. So starting with broadcasting, how has the move to streaming and kind of the disruptions among all these big players been impacting the way you do business and approach these companies?
Thank you, Shanali, for the question. I think for us, we're trying to help these broadcasters. They spend so much money on original content. I mean, as lots of research around last year in Variety, they said across all these various broadcasters spent over $30 billion in creating original content, creating shows like Succession. And they need to offset those expenses in a more thoughtful way. Also, you think about TikTok, short form video. And they're attaching commerce to these kinds of experiences. So broadcasters, you think about when Friends first came out, everyone wanted to have that sweater or they wanted to have that haircut, from the various characters. There was always this element of shoppability to it. And so today with AI and being able to take advantage of that ability to turn things into shoppable items, I think that's the next frontier for these broadcasters in a very thoughtful way, because again, you don't want to disrupt, those producers and all that, and the folks who are building these shows. We don't want to mess with the experience. And with the ShopSense technology, we're leveraging the phone, the secondary device, in a more thoughtful way, where it can leverage a QR code, but we're not disrupting. Think of it like Shazam.
Okay.
You remember the app Shazam?
Yeah, Apple bought it.
Yeah, exactly. For $400 million. Yeah. And the thing is, it was like discovery and inspiration. But I didn't mess with the song. Right. And that's what we're trying to do.
Okay, so let's talk about the technology, because you're from New York. You spent your career in Silicon Valley. Your background is in advertising and marketing, but also at tech companies like eBay, for example.
Yeah.
So talk to me a little bit about the technology and how you're able to Shazamify video.
Okay, cool. So first and foremost, you have to get the retailers. And so our technology, what we've done is we've secured relationships with well over 1,000 retailers directly, in which we got their product feeds. And then leveraging the computer vision technology, which is a form of AI, we've built all sorts of algorithms to actually organize all that content, so when the curation and the process occurs, we're able to organize by show type, by the type of programs, or what the actual producers for the specific shows are, being able to show us what people are wearing. Okay. The technology can actually curate the content.
So that's one side of your market. The other side of your market is consumers, the people who are actually watching this stuff.
Yes.
And you want to buy this stuff. How does the tech work on that side?
Well, in its current format, we are allowing them via QR code. Someone on the glass, if they see an actual shoppable moment, they can see the QR code and take a snap of that, and it takes them right into our stores, where it's all curated based on various types of subjects and areas.
So that QR code will come up on the screen.
Yeah.
I can imagine it's not disruptive for like live sports or for like a game show, for example, or news. But I could see it being disruptive for a drama.
I think for various types of shows, it works really well. Like think of live events. It'll make, for sports, it'll work really well. Or, on the runway type, we for Paramount, we launched for the CMT Awards, and, the red carpet, aspect of it. I think it's a really good use of the technology. I think for certain types of things, we can message people after the show.
Interesting.
That could be one thing. And then we are releasing in the summer the ability to snap, use the camera, and again, take a picture of what's on the glass, and then produce results along that as well.
So you have the one word here that has been the hot ticket in the world of, investing, AI, right? How is AI actually being used to kind of change this technology, given AI itself is changing so quickly?
So for us, how we're leveraging AI is automation and scalability. And what I mean by that is the ability to, when we're building all these stores and curating all these outfits, we're letting the technology create that automatic merchandising of all the specific items in the store. So when we're taking a picture of maybe this sport coat, the technology is looking in the database of 500 million shoppable SKUs, because as I told you, we have relationships with 1,000 plus retailers. We have all their content through product feeds. And so the technology has to go through that and match all this stuff in a large way. And that's leveraging AI to create all those shoppable looks. And then we're trying to do this so from that standpoint, that's one element of it. The other element of it is, how do we become more efficient to launch different stores for all the different content at scale? Because today, in certain companies, it's done manually, and it's just not cost efficient. And so we're trying to automate that process and do it on a repeated basis.
Very cool stuff, Glenn. Thanks so much for stopping by.
Yeah, thank you so much, Tim and Chanel.
That's Glenn Fishback, co-founder and CEO of ShopSense AI, joining us here in the Bloomberg Interactive Brokers studio. It is Friday afternoon, and taking a look at how markets ended up closing on the week, the Dow was higher by 1.2%, the S&P 500 higher by 1.5%, the NASDAQ Composite to the upside of 2.1%. You're listening to and watching Bloomberg Business Week.
your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. Apple is reportedly developing a significantly thinner version of the iPhone. That's according to the information that said this new iPhone could be released as early as 2025. Apple shares today, end of the session, little changed. Reddit shares rallied 10% today after forging a partnership with OpenAI that will bring its content to the chatbot ChatGPT and other products, while also helping the social media company add new AI features to its forums. And we get more with Bloomberg's Tom McKenzie.
It is a two-way deal because, of course, OpenAI gets that data that, of course, Reddit has described as very valuable in the past in the lead-up to its IPO in March. OpenAI gets the data from the Reddit social media platform and is able to train on that. We know there is a data deficit right now for these large language models, so that's helpful for ChatGPT, of course, the product that OpenAI is behind. What Reddit gets is some of the use cases, so some of those models and some of those top-line software applications that are going to be built in now to the Reddit platform that have been designed and created by OpenAI. So it is symbiotic.
Bloomberg's Tom McKenzie. Again, shares of Reddit, RDDT on the ticker, up today by 10%. Sources tell Bloomberg Snowflake is in talks to acquire startup Reka AI for more than $1 billion, expanding the software maker's effort to offer generative AI capabilities. Snowflake makes tools to organize and analyze data in the cloud. GameStop shares tumbled again today, down another 19.7%, a third day of declines after the company said it may sell up to 45 million shares. Early in the week, we saw AMC shares rally. They fell today by 5.2%. Those are our top company stories, and this is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
It is Bloomberg Business Week. I'm Tim Stenevec. That's Sonali Basak, Bloomberg News global finance correspondent, in for Carol Masser this afternoon. Let's get a check on the latest world and national news. We got Amy Morris in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Amy.
Hi, Tim. The Israeli military says its troops in Gaza found the bodies of 3 Israeli hostages killed by Hamas in its October 7th attack. Officials say all 3 were killed by Hamas while fleeing the Nova Music Festival that day. It was an outdoor dance party near the Gaza border. The military says the bodies were found last night and the families have been notified. Houston is in recovery mode. A violent cluster of storms rolled through that city, causing widespread damage and power outages. At least 4 people were killed. So utilities say it'll take a couple of days to get everybody's power back on. Houston Mayor John Whitmer says glass was blown out of some downtown buildings and trees and power lines were knocked down throughout the city.
I can't emphasize enough the danger of fallen trees and fallen utility wires. Downtown is a mess. It's dangerous due to the glass and the lack of traffic lights. So stay at home.
They stayed home. Schools and businesses were closed today. Whitmer says the storm brought 100-mile-per-hour winds and left that debris across the city. The world's top-ranked golfer, Scottie Scheffler, returned to the PGA Championship after he was arrested this morning by Louisville police. Scheffler posted on Instagram that what happened this morning was, quote, chaotic, and that he misunderstood what he was being asked to do, and that he never intended to disregard police directions regarding a traffic fatality. Now, he wasn't involved in that accident, but he did drive through the police roadblock. The golf star faces charges of second-degree assault on a police officer, reckless driving, and some other offenses. And Fed Chair Jay Powell working from home. He tested positive for COVID. A Fed spokesman released a statement saying that the Fed chair is experiencing symptoms, so he is isolating. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris. Now back to Bloomberg Business Week with Tim Stenevec and Sonali Basak.
Thank you so much, Amy. Do appreciate that. And happy Friday to you, Amy. Happy Friday to you.
Friday to you.
Thank you. Happy Friday to you, Sonali Basak. As we end the week here, I know you got your eye on divergence that you've been keeping a look at this week. What's on your radar?
Totally. It's kind of like what works in this market. Okay. You have the S&P 500, fine. It's had a rally over the number of weeks. But if you look, a lot of these indexes were really struggling to stay in the green by the end of this week. And the stock market was quite mixed. Even though you had the S&P close above 5,300, the Dow Jones above 40,000. Everyone is so excited.
It was a week of records.
A week of records, but you still had the Philadelphia Semiconductor Index down today, and you also had the Russell 2000 down as well. And there's a big question in the market on how much breadth, how much widening people will be willing to invest in different areas, those small caps, mid caps. If inflation comes down, the expectation has been, if rates come down, the expectation has been that those would be the stocks that would benefit.
Yeah.
But we're only really starting to see that a little bit. But you do see days like today where you wonder where things go from here.
I'm curious, you were out in California, I think, was it just for one day this week?
It sure was.
It was a quick trip, okay. It was a Goldman Sachs conference.
Yes.
Was that a topic with the folks you interviewed out there?
Well, it was interesting with the folks out there. Yes, it was less about the market and more about the equity market, more about the credit market.
Okay.
But similar themes here. Those markets are also wide open, and people have been plowing money into bonds and risky bonds. But what can throw the party off? They seem pretty sanguine. You know, David Costin, their chief equity strategist,